Hey everyone, just a quick update on what's happening with the latest inflation figures that came out today from the Labor Department. The good news is that prices have moderated from their steep rise over the last year. They're still pretty high, and I'll touch on that shortly by category. But the good thing is they are moderating, which shows that all the Federal Reserve actions to lower interest rates is finally working. You can see this article from the Wall Street Journal, which contains some of the highlights, and I'll just touch on those briefly. So they rose at the slowest 12-month pace since December 2021. So it's not necessarily the year on year change, it's also the pace of which inflation is increasing or decreasing. And the fact it's slowing down means all those interest rate hikes that the Federal Reserve has been doing over the last few months is finally seeming to come through the economy as the price of goods and services fall. So there's two ways that they look at the inflation figures. One is based on a year over year number and then a month to month number. So it's climbed 7.1%, the overall CPI figure in November, but it's down from the 7.7% increase recorded last month. So the pace of increases is slowing, which is a good sign. Of course, this is way above the 2.1% average rate in the last years before the pandemic. And just to give you an idea, if something is going up at 7% per year, in about 10 years, that thing will double. So if you get a rate of return on $100 and it's 7% a year, it'll be worth $200. So imagine something today which costs $1,000. In 10 years' time, it'll be $2,000. Or a car you buy today for $20,000 could be worth $40,000 within 10 years. So inflation has to be controlled because the compounding effect of inflation can be pretty significant. The other one, which is important to look at, is a core CPI, which excludes the energy and food prices. So those are more volatile, so they tend to change a lot more. But they rose six. This core CPI, which is what the Federal Reserve likes to look at, that rose 6% in November. Again, it's not as high as a 6.3% gain from last month. So again, it reflects the fact that things are slowing down as well. All this basically means is that the Fed is probably on track in their meeting later this week to come out with a half a percentage rate hike. So this is better than the 0.75% that folks were looking at, but the 0.5% will be much, I think, in line with market expectations. And while it's still high and we're approaching 5% for the federal funds rate, it's not as bad as some people were predicting. I think we'll still have a couple more small rate hikes next year, but this should hopefully be the plateau of the Federal Reserve actions. And this is well reflected on the graph here, where you can see that inflation, back into the 1980s, it was super high, it came down. We had a lot of low inflation for almost all the 90s and 2000s, and then we had the spike in the last year. And you can just see here that it's coming down a little bit over here, which is a good sign that, I think we're moving back in the right direction. Of course, it's a fine line between balancing for interest rates and recession, because as the Fed raises rates, there's a higher chance for recession as the economy slows down. So it's a fine balance, and you'll keep hearing the word soft landing. So hopefully this is a good sign that it's decreasing at a slow pace and not just completely crashing as well. The other thing I'll touch on from the Labor Department, they do publish also at a category level what's happening, which I think is pretty insightful and I think will reflect what a lot of folks are probably seeing when they go shopping at the grocery store or they're going out for dinner. So there's two columns I would focus on here. So you look, it's these two. One is the year over year change, so from November 2021 to November 2022. And then there's the unadjusted 20, which is the month over month. So, you have to look at both of those sort of together. I tend to prefer the month to month because it's sort of more relevant. Year to year, everything is going to look high because we were so low last year. But you can see here, this really confirms what everyone's probably already feeling at the supermarket or at the gas station. Over a year, cereal and bakery products are almost 16.5% above what they were last year. And over the last 2 months, they've gone up by 0.8%. Of course, the good thing is meats, poultry, and eggs has dropped since last month, which is a good sign. Hopefully, we'll start seeing this in December, January at the local level, because I think prices go up quickly, but they don't always pass through as fast. Fruits and vegetables, also the pace is slowing. You can also see here non-alcoholic beverages, other foods, but restaurants are still showing a 0.5% increase. So the good thing is that you're seeing more negatives versus previous months. It was all positive increasing. So the fact that we're seeing a decrease in some categories is a great sign. Some will take a while to flow through, but the good news is the trend is downwards as well. And then energy prices are going down, and I'm sure everyone's noticed record low gas prices at the pump. So this is a data representation of that fact. So definitely month over month, uh, prices are coming down, but still, prices are pretty high compared to last year at this time. So it depends how you look at it as well. Apparel as well, clothes are coming down again. That's a huge inventory. I'm sure you'll start seeing lots of sales in January. New vehicles have slightly ticked up. But the good news is used cars are going down again. And this has been a trend for a while. So used cars had at some point gone up to the point where they were selling for more than people had bought them. But that trend is slowly changing as well as used car prices come down. And these sort of big ticket items will definitely have a difference when it comes to the economy as well, because they tend to affect a lot more people. Same as rent. So rent prices are going up, but at a much slower pace than maybe what has been in the past, right? But still, year over year, people are paying almost 8% in rent as well. And there's two figures here. One is primary residence, and then is owner equivalent, looking at rentals as well. So that's going up. Medical costs are going down, which is good, but those seem to be in a long-term upward trend anyway. But overall, I think the good news is that, and I'll touch on airline fares; those are also going down. But overall, the good news is that there's definitely a lot of things that are dropping in price. Inflation is subsiding, so hopefully the Federal Reserve is taking less aggressive interest rate actions, and the economy doesn't crater into a recession. That's the update. I'll come back next month with the next reading as well. Thanks.